Hello, Theo traders. Gianni DePoce here, and today is the 6th of August, 2024. And there's a lot of concerns circulating in the market right now following a very steep sell-off that accelerated on Monday. We saw the Japanese Nikkei crash, recuperated much of those gains in the Tuesday session. So let's go ahead and take a look at what's going on here in the United States. This turmoil we've seen ties into the unwind of the carry trade in the Japanese yen, which is something that I've been very, very adamant about as a possibility to bring down markets over the last few months. And now we're seeing that unfold. And obviously, there's a tremendous rise in fear in the market. I don't know if we should go as far as saying markets in turmoil, but we started off with quite the sell-off on Monday. We're seeing a nice recovery here so far on the day Tuesday. And I must say, the fact that we've not hit oversold on the RSI indicator on the S&P 500 futures is a feather in the cap of the bulls. Now, I'm not saying that we're bullish now. We are below former support turn resistance in the S&P, especially in this, 5,400, $5,500 zone. Until the S&P can get back above there, I think there are some serious technical concerns. But needless to say, there's been a tremendous rise in bearish sentiment, and I think a lot of people followed and piled on to shorts yesterday. We did see a tremendous spike in volatility, and some of the statistics with respect to the VIX spike are concerning, and I know that Don has been talking about that as well. But you take a look at the NASDAQ here, you are seeing the NASDAQ outperform to the upside today, and you're seeing a nice relief rally in many chip names. Now, to be clear, I do think there are still some downside risks, but in full transparency, I did actually start buying a little bit yesterday on Monday. Now, I came into this week about 40% cash. So it was kind of a nice feeling coming into Monday. The crowd's panicking. Here we are, calm, cool, and collected here at TheoTrade. We were prepared for the sell-off. And, in some of the names I made some buys in, which I'll discuss in a moment, my thought process was more along the lines of risk reward. I'm not necessarily concerned with buying the absolute low during this decline. If I can get, a couple days away from the low or a couple percent up off the low, that's good enough for me. I'm concerned with the 80% of the move, not the extremes at the high or the extremes at the low. I didn't sell the absolute high in the stock market, but I did sell early. And I don't think I bought the low in the stock market, but I did buy early. And you consider the NASDAQ has dropped around 17% from its high to its low yesterday. And so that's a pretty significant correction. And, in this particular case, you also did not see the RSI indicator fall into oversold territory, which is noteworthy to say the least. Now, take a look at chips. Chips are up over 3% today. I'm still concerned about what's happening here. I don't know if this will continue to lead. This could be, the first or early innings of a cyclical bear market. I think that if the economy does slow down, we are seeing the yield curve re-steepen. The 2-year yield is finally yielding less than the 10-year yield for the first time in about 2.5 years. So there are some concerns that the economy is slowing. And when I look at this chart of this Philadelphia Semiconductor Index, I have the same concern that I have with the S&P and the NASDAQ. That is, there's plenty of resistance above this market right now. And in this case, the 5,000, 5,200 zone is going to be tremendous resistance. Okay, so I actually don't have any chip names on the books right now, but I have been paying attention to what's been going on in cryptocurrencies. And, Bitcoin, this has all the marks of a capitulation of some form. There is a little bit of bullish divergence here on the futures chart. We are still within this broadening wedge formation. And take a look at the weekly chart now. As of this video, we are still down on the week, but set to potentially close above the weekly close from the week of July 1st. Now, granted, there's still 3 full trading days left in this week, and a lot can happen between now and then. But be alert for some capitulation. That's why I alerted members to go ahead and pick up some shares of Marathon Digital Holdings yesterday amidst turmoil. It was just a risk reward play. I wasn't doing this with the intention of catching a bottom. It was just a matter of saying, hey, if I can buy now instead of stop loss on a close below support, I might actually come away with a nice risk reward, and I did. But this wasn't the only trade that I picked up yesterday. I also picked up Lifetime Group Holdings, which is the gym, uh, you know, line. Okay, Lifetime Fitness. And we picked this one up, showing tremendous relative strength. It got through its earnings. Keep in mind that, headline risk is elevated right now with earnings coming around here and there. But I really like the setup on this stock. It's at new all-time highs. It looks very bullish. Momentum is firmly in the camp of the bulls. And this is a stock that's up almost 7%, amidst a tape that is still vulnerable. So tremendous evidence of accumulation. I don't talk a lot about fundamentals, but the stock's fundamentals are very strong, growing their revenue and their earnings pretty nicely. So this is a solid candidate for being a new leader if we do come out of a cyclical downturn here. But I also want to bring attention to the tech sector because something very important happened yesterday, and it concerns the fact that we took out the low from April. And we did so with the case of bullish divergence in price in the RSI indicator. And XLK, the tech ETF, fell 19.9% from its high here on the 11th of July to its low here on the 5th of August. Now, the bear market Puritans will say, oh, a bear market's 20%. Well, I like to characterize bear markets by lower lows and lower highs. And yeah, sure, we have some here. In fact, since we took out this low from April, that's a real concern. And here too, we have some tremendous supply above this market, but we dropped about 20% in a matter of what, 3 weeks? That's pretty dramatic. That's pretty dramatic. So I didn't go out and, buy XLK, so to speak, but this is potentially for long-term, investors, a good buying opportunity still even here today. Okay. And you can always stick a stop loss below the close here from the 19th of April. And if you start taking that out, that could be your line in the sand, but a tremendous dip buying opportunity that I don't think should be ignored in its totality. So there's a lot of fear out there. There's some things holding up all right, and that's what we need to pay attention to is the relative strength. The stocks that are holding up the best now, the ones that are near their highs, are most likely to become the market's next leaders when this decline is over. Okay. Now, let's take a look at the Japanese yen, because obviously this has been, the canary in the coal mine. I've been talking about this currency for quite some time. Was able to get traders. We were able to get a really nice return on Japanese yen longs. We started buying back here. We alerted to some, cyclical factors that pointed to a much higher Japanese yen. We had a target of 70 cents or $70 on the Japanese yen, and we satisfied that yesterday. So came away with a really nice trade on the Japanese yen, and we cannot rule out the possibility of a consolidation or a minor corrective decline. But time will tell as to whether, this is going to continue higher. My concern is that when the Fed cuts rates in September, that's going to decrease the spread further in the carry trade. Okay, so you're seeing a lot of headlines and news bits about the carry trade over the last few days. It's something we've been talking about in these videos for many months. You can go back and look. We've been talking about the Japanese yen and the risk that it posed to the market, and it came to fruition, and we capitalized on it. We put our money where our mouth was, and it worked out. So this is a big concern, and now you're seeing the US dollar against the euro making a little bit of a comeback. And that's been one of the most peculiar things about this volatility in stocks, is that it hasn't really coincided with a flight to safety into the dollar. That is highly unusual. Okay. And it does raise some questions as to the sustainability of this pullback. Usually when the world is going into a downturn, global capital seeks out the safety in dollars. Now, while that has not happened, we have seen that generally unfold in the bond market. Tremendous bid in bonds, 30-year, 10-year bonds getting nice bids. But I've been adamant to not chase this move. Looks like we have a cyclical top here. Could see a multi-week decline. And this may provide fodder for stocks to continue higher. Now, interestingly, crude oil looks to be trying to complete a low. I'm not really that confident in this commodity right now due to the potential of an economic slowdown. But this is something to watch, because once the Fed turns the money printer on again, it should be bullish for commodities overall. Gold and silver have been a little bit defensive today, and silver up slightly, trying to potentially form a low. I think that there's a lot of value in these precious metals right now, especially with lower rates on the horizon. If the dollar weakens, it should be a tailwind for precious metals. We had a nice earnings result in Anglo Gold Ashanti. On a few of our precious metal names, we've tested the stop losses, but they're holding so far. Shows, that they are strategically placed. Agnico Eagle Mines coiling near the highs. So I'm not ruling out a potential big rally in precious metals in the coming days and weeks. And, it could be politically related. It could be geopolitically related. But right now, the whole point is that focus on high quality setups, focus on relative strength, let the market come to you. And, I've been talking about biotech for quite some time. It's showing some resiliency. A few of the names that we've had in this space, Nurix Therapeutics up almost 6%, Mirum Pharmaceuticals showing some strength, Protagonist trying to complete a higher low, and then you have Neurocrine Biosciences a little bit quiet today, but it was up significantly last week when the rest of the market was in turmoil. So I can live with that for now. So I'm just going to reiterate it, guys. Relative strength, focus on what's holding up the best. It's what's most likely to become the next round of leaders once this market rout is over. So that's all for now. Thank you so much for watching, and I hope to see you in the TheoTrade chat room. The one final announcement that I wanted to make is that we have our live event at TheoTrade September 19th to the 22nd in Scottsdale, Arizona. Check it out. It's going to be my first TheoTrade conference, and I don't think you want to miss it. Also have a special masterclass that I'm putting on tomorrow at TheoTrade about AI timing webs. So it's a new service that we launched here at TheoTrade for some stock setups and education. So feel free to check it out. I think you'll really like it. Any questions, send us a note. Thanks for watching and see you next time.